Yeah, got to get right to it. Let's go, go, go. Everybody, Wall Street winners for February the 11th, and disclaimer for February the 11th as well. All right, let's get right into it. Okay, I'm starting to see some signs of weakening on our bull move. So, the S&P chart looks pretty good. We had a normal retracement. We had a little mini reversal day on Friday. That's pretty good. Purple predictor, pretty good. But there's a couple things that are starting to worry me a little bit here. So let's just break this down. One of them is the buying pressure, which is the green line in the purple box. It went down. And at the same time, the selling pressure went up. Now, look, that happens all the time in a bull market, but it jumped quite a bit, all right? The other thing is look at the black line. The black line is the ADX, and it is a strength of trend indicator. So the last several weeks, it was saying, hey, you know what? This is no longer a neutral market. This is actually a real bull market. But then the ADX came down this week, suggesting, well, maybe it's really just a neutral market. Now, neutral, according to the ADX, would be looking back over the last several months. And as you can see, we're really at the same price we were in December, November, October, August, July, June, May, April, March. You get the point? We haven't gone anywhere since the beginning of the chart, and actually really since January. So I think what it's saying is, listen, you've had a nice run to the upside, but now there's lots of selling above the market, up at 26,000, 26,250, 27,000. So you know what? It's going to struggle from here. That's how I'm interpreting this. The NASDAQ looks better. That purple predictor remains very, very strong, showing the smart money is putting their money into NASDAQ type stocks. Seasonality paused, no big deal. We need to get above that green line on the Russell 2000 before I'm going to turn my seasonality indicator bullish. The other thing to look at this chart is look at the angle of ascent. Look at the sharp angle we were at from the end of December to the middle of January. Now notice that the angle of the bull market is much flatter, showing once again running out of momentum. Our seasonality, well, it just should be bullish all the way to July. Now, this is one of my concerns as well. We had a month where the yield curve bounced back up again, taking the pressure off. As you know, I am calling for a financial crisis, and the financial crisis will be triggered by the yield curve. We got down to the level where I would consider it to be a trigger and bounced back up again, and here we are, we're back there again. Now, this is a one-year leading indicator, so it would suggest that maybe the financial crisis will be maybe December, January, February, December of this year, January, February of next year, something like that. You can't be too precise, but roughly 1 year in advance. We're coming back down. This is very disturbing. Not for right now necessarily, but for a year from now. Asset allocation, no big deal. Moved a little bit out of stocks and into bonds. Our risk indicator came down a bit too. There, and well, for you fully paid up members, when I get into my sector analysis, you'll see that the safe haven sectors have turned back into bull market. So it's all fitting together here. Global shares came down sharper than the U.S. Once again, you see what I'm saying? It's not the end of the world. It's not the end of the world, but, what can I say? There's things that are bothering me. Bonds back into a bull market. Hey, wait a second. We don't want bonds in a bull market in a way, because that means interest rates are going down, which in the long end of the yield curve, which is why the yield curve is getting flatter. We want these bonds to be in a bear market so that we can get a more positive yield curve, but we're not seeing that right now. Our bond key factors are suggesting, look, the most important one is the blue line. The blue line is the 10-year treasuries in Germany, and it's sharply plunging here, and that's what's putting downside pressure on U.S. interest rates, which is the green line. The other thing is the CRB index, which is the chart there, the red and black chart. It paused. It had a sharp rally, but it's starting to drift a little bit lower. So the only thing that suggests we should see higher interest rates is gold, which is the gold line. The dollar popped up, and, I'm getting more bullish on the dollar because the U.S. economy is just so much stronger than any place else. And in addition, but gold had a dip, but it looks like the dip might be over. So we have a clear bull market here in gold, so we should be trading gold from the long side. Our indicators, though, are not that bullish. The top one, which is the euro, kind of flat. The middle one, the CRB, kind of flat. Now the bottom one is the yen, and the yen is you can see it's really in a bear market here. That's the green line, although we did hook up late last week. Oil is paused here. I am getting more and more bullish and think that we're going to head it back up to 70, but right now it looks like it's taking a little pause that refreshes. And Bitcoin had a sharp bump up on Friday, but still remains trapped in a trading range. My trading strategy, as you know, I'm short Bitcoin right now. And you can see that the channel, which is the kind of shaded area, the top end of the channel is now 44.41. So if it breaks out of that, I'd cover my shorts and I would get long. Now the purple predictor is starting to get a little bit bullish. So we may be putting in a bottom here in Bitcoin, and we'll have to see. Now remember, I called originally for it to go below 4,000 because that, in a general sense, is the cost of production for Bitcoin. And all commodities, and Bitcoin is just a commodity, always at some point or another go below their cost of production. That chokes off production of Bitcoin, therefore causing the supply of Bitcoin to contract. All right. That's what I got for you. The new edition of the Financial Crisis Report. It's called Financial Crisis 2019. It is now out. You should have received several emails about it. I think I sent out 3 emails. Please get it. It's very, very important that you read it. Also, I get all my great stock ideas from Stock Butler, so check it out as well. All right, freebies, love having you here, but it's time for me to go and start concentrating on the people who are even cooler than you are, my super cool fully paid up members. Fully paid up members, hang on for just a second.